Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Associated BNC-CORP quarterly report. Associated Bank-Corp offers a wide range of banking and non-banking products and services to individuals and businesses across 4 states. The company's business offerings include lending solutions, commercial loans, lines of credit, construction loans, leasing, equipment finance, loan syndications, deposit and cash management solutions, commercial checking, interest-bearing deposit products, cash vault services, liquidity solutions, specialized financial services, interest rate risk management, foreign exchange solutions, fiduciary services, pension plan administration, corporate agency services, institutional asset management, investable fund solutions, savings accounts, money market deposit accounts, IRA accounts, CDS, annuities, investment advisory services, trust and investment management accounts, deposit and transactional solutions, checking, credit and debit cards, online banking, bill pay, money transfer services. Associated Bank-Corp stock price increase. A year in review. Over the past year, Associated Bank-Corp (ASB) stock price has seen a modest increase of 10.52%. Several key financial developments have contributed to this rise. The company's strong third quarter 2025 earnings per share (EPS) of $0.73 exceeded analyst estimates, driven by higher net interest income and non-interest income. Additionally, lower provisions and an improved efficiency ratio further boosted profitability. The increase in common stock dividend announced on October 28, 2025, also signals confidence from management and can attract investors seeking income. Furthermore, the upgrade to FICO Auto Score 10 demonstrates operational improvements that may lead to better risk management and financial performance. Analysts' 12-month projections suggest a potential for continued growth, with earnings forecast to increase by 31.04% per year. While past performance is not indicative of future results, these developments have contributed to the recent stock price increase. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth drivers. 1. Net interest income, a plus 19% increase driven by higher yielding loan balances and balance sheet repositioning, resulting in a $114.2 million increase. 2. Non-interest income, a 5% increase primarily due to elevated activity in syndications and swaps businesses, contributing to a $9.7 million increase. 3. Mortgage banking revenue. Notable increases of 60%. 4. Balance sheet repositioning. Key drivers include organic growth in higher-yielding loans and repricing of deposits downward. Revenue decline drivers. 1. Investment securities gains, losses, net, a $4 million decrease due to a non-recurring gain on sale of Visa B shares. 2. Loss on mortgage portfolio sale, a $7 million loss contributing to revenue decline. These drivers indicate that the bank's revenue growth is primarily driven by net interest income, non-interest income, and mortgage banking revenue, while balance sheet repositioning also plays a significant role. On the other hand, investment securities gains/losses and losses on mortgage portfolio sales are the primary drivers of revenue decline. Net income experienced a significant increase in 2025 compared to the previous year. The consolidated corporation net income rose by 42%, reaching $124,732. This growth was also observed at the segment level, with corporate and commercial specialty experiencing an increase of $29,246 and community, consumer and business seeing a rise of $52,888,000. Profit margins, however, showed mixed results. The non-interest income margin increased by 3.2%, reaching 15.6%. Conversely, the net interest income margin decreased by 3.2%, settling at 45.1%. Operating profit margin saw an improvement, increasing from 23.3% to 26.2%. The divergent trends in profit margins can be attributed to various factors, including changes in market conditions and shifts in revenue streams. The increase in non-interest income margin suggests that the company has successfully diversified its revenue sources, while the decline in net interest income margin may indicate a decrease in lending activities or a change in interest rates. The company's financial performance indicates a consistent generation of positive operating cash flow over the past 2 years. In 2025, the net cash provided by operating activities reached $397.6 million, while in 2024 it was $373.1 million. This trend suggests that the company is successfully managing its operations to produce a steady stream of cash, positioning itself for long-term financial stability and growth. The company's debt level has undergone significant changes over time. Initially, there was a substantial decrease from $7,766,928 to $1,492,429,000 between pages 20 and 48. However, this trend reversed with an increase of $2,159 on page 48 and another increase of $1.9 billion, 6%, on page 60. Additionally, long-term FHLB advances decreased significantly due to the payoff of BTFP funding. In terms of interest expenses, there has been a notable decrease from $817,021 to $251,369 between pages 6 and 12, representing a minus 69% drop. This trend continued with a decrease in interest expenses on page 60 due to a lower cost of interest-bearing liabilities, 54 BP. However, some segments experienced increases, such as community, consumer, and business, which rose by 43%. Overall, the company's debt level has fluctuated significantly, while interest expenses have generally decreased. The company's financial performance varied across different segments. The community, consumer, and business divisions excelled, generating a net income of $276,077. Similarly, the corporate and commercial specialty segment performed well with a net income of $217,585. In contrast, the risk management and shared services division struggled, resulting in a significant net loss of minus $208,902. Management is focused on improving net interest income by repositioning the balance sheet through the sale of lower-yielding securities and mortgages. They aim to achieve this by focusing on organic growth in higher-yielding loans, particularly in commercial and industrial lending. Additionally, they plan to manage interest rate risk by repricing deposits downward in line with market rates. This strategy is expected to lead to long-term success despite short-term losses. The company's financial summary reveals that it has engaged in two key shareholder return initiatives. Firstly, the company has a history of paying dividends to its shareholders, with specific details available on page 12. Secondly, the company has also invested in buying back shares from the market, with the amount of treasury stock purchased outlined on page 9. That concludes the financial summary for Associated BNC-CORP. Feel free to comment below, and I will be happy to answer them when possible.